If you want to start or have already started an Amazon business, you might be wondering, should you be taking out a loan or credit cards to really ramp up your Amazon business? In today's video, I'm going to share my honest opinion on whether or not you should be taking out loans or credit cards for your business, as well as the considerations to think through as you're making this decision. Now, the very first thing to realize in this conversation is that I am not a CPA, I'm not a bookkeeper or tax advisor in any way, and every single situation is going to depend on your own personal situation that you have in your business and in your own personal life. So this is my disclaimer. Talk to your bookkeeper, talk to your accountant, talk to your tax advisor so that you make the best decision possible. So let's talk about credit cards. Now, in today's world, especially for Amazon sellers, we see people all the time that say, hey, if you just take out a credit card and you go and you buy these products, you send them in, you make all this profit, it'll all be great. Everything will grow and scale from there. However, there's a huge difficulty whenever you're trying to run your Amazon business solely off of the credit from credit cards because of multiple reasons. First, you could be making bad purchase decisions as you're learning the ropes of Amazon. So if you have no experience on Amazon, I don't recommend starting off your business by utilizing credit cards because the interest rates for credit cards, if you can't pay them off at the end of every month, are 20-25% sometimes, and that interest will kill the profit margins of your business. However, if you are somebody that's been doing Amazon long enough, or you feel comfortable in your buying decisions and you can pay off your credit cards at the end of every month, then that's where credit cards can start to make a lot more sense. So I would rather see somebody start out slowly and build up the skills, the expertise, the inventory required to grow their business before they were to take out credit cards that then could actually have worsened their business. And so we need to be smart about how we're utilizing credit, and specifically credit cards, because they can ultimately lead to the decline of your business. Another issue that I see with sellers that try to use credit cards and end up failing with them are if they are a smaller seller and they have learned the ropes for a few months and they elect to get a credit card that ultimately they aren't fully ready for. They don't have a good handle on their bookkeeping, they don't have a good handle on whether or not they're profitable, and they just think, if I get this credit card, I'll make all this money because I can put it all towards inventory. But if they're making bad purchasing decisions and you don't know if you are or not, then that can be a huge problem. So my recommendations from a credit card standpoint for Amazon sellers is that if you are somebody that's been selling for a few months and you have a good handle on whether or not you are profitable, then that is the time to start thinking more about when should you look into using credit cards and when you can maximize the points that you can get, what cards you should get, and how to best serve your business utilizing credit cards. Now, there is a lot of training that I've done on bookkeeping and the profit first method on my channel. Now, this isn't for credit cards specifically, but it is for learning the books for an Amazon and e-commerce business. I recommend checking out those free YouTube videos because it does give you a decent framework on what you should be doing in your business. If you are somebody though that is looking to get started with a bookkeeper and you want a CPA and tax advisor to help you with that, I recommend going to ecommerceaccountingllc.com because they specialize in e-commerce businesses. It can also do other businesses if you have those needs, but ultimately e-commerce is a different animal and a different game. And so a CPA that specializes in that, bookkeeping that specializes in that, that's what you'll need to make sure that you're doing a good job and you're ready to take out any credit cards. Or our next topic, loans. Now, loans can make sense in some cases. I've taken out loans just like I've used credit cards extensively. However, there are big issues with loans, especially for those of you that are new, and you can kind of see this as a theme. I do like loans in many cases because the interest rates should be much lower than credit. And so with a loan, you've got a few other considerations to think through. So let's talk about when I would potentially use a loan in my business. Again, I don't know your situation, but when have I used loans in my business? The first time that I've used them was whenever I knew that there was a season coming up, such as the fourth quarter for Amazon and e-commerce sellers. That's a big time of year for retail. And so I knew that I needed more inventory to capitalize on that season. So I had a loan offer that had about a 10% interest rate at the time. I was able to take out that loan and then immediately apply that loan to buying more inventory. I think there are a lot of sellers that like to get a loan and then not use it all on good inventory. They might put it into outsourcing or put it into a building if you need a bigger warehouse, and those have their own uses. For my own personal use, I liked to use my loan for inventory because I knew that the interest rate on that loan was going to be paid for by the profit of the inventory I was selling. And so because I had a backlog of profitable inventory inventory I wanted to purchase, and I knew how much that was going to be, that gave me the ability to get the loan, immediately apply that loan to those pieces of inventory that then I could send in the fourth quarter, make a bunch of money, and then I paid off the loan completely after the end of the fourth quarter, a couple months into the new year. And so those are the times that I've elected to use a loan for an Amazon business. I've used loans for other things as well, but that's the time when I think that it is best utilized if you know that you can take that money, put it towards inventory that is profitable and will sell, and you have that confidence in it, then you are on the right track. So let's talk about when I wouldn't take out a loan. First, as I've mentioned multiple times, if I'm still learning Amazon selling, I do not recommend that people take out loans. Don't even go to your friends and family for a loan until you're confident in the processes, until you're confident that you like the business and that you can find products and send them in and sell them at a profit. Second, if you're not confident that inventory will sell, don't ever take out a loan or a credit card to buy inventory that you are unsure about. Because if you do that, you may get hit in a bad way and it could crumble your business. And so we need to make sure that if you are using other people's money, that you're going to be able to make a wise decision and apply that money towards inventory that has a very high likelihood of selling. You don't want to put everything at risk and essentially gamble this loan or this credit card money, because then you have a huge problem that could be on the horizon if this inventory doesn't sell. Third, don't take out a loan to launch a private label product on a new product line that you have not tested yet. This is a huge problem that I see, especially with Amazon sellers, especially in the YouTube space, right? I'm on YouTube, so I'm a YouTuber, right? I see all these YouTubers that are like, hey, private label's the thing. You can have a sellable business, your own brand, maximize Amazon, use their catalog, all of these things. But as you're learning this process, you have to buy a bunch of inventory, typically overseas, sometimes in the United States. But with those, there's usually large order quantities of maybe $5,000, $10,000 that you need to purchase. And if you don't know these things are going to sell, then you have a huge potential problem on your hands. Now, if you have a private label brand and you have an actual product that you know will sell because you have demand for it, that's a different story. But if you're brand new or you're just trying to jump into private label, don't take out a loan for a private label brand that you don't know will sell based on some keywords and some traffic that you think is there. Only utilize loans and credit card money for things that you know will be selling. Because if you've got that brand and it's established, then yes, absolutely, there's definitely purposes for using a loan to get inventory. But if you don't have those things established, then you're just essentially gambling that money and hoping that it turns out good for yourself. And then the last thing is make sure that if you do take out a loan, if at all possible, try not to have it have a personal guarantee. There are plenty of loans, specifically SBA loans, Small Business Administration loans, that you can take out, and they have certainly many uses. However, they typically have a personal guarantee attached to them where you, as the person who owns the business, are guaranteeing that that loan will be paid back. And so they can come after personal assets. And if you do take out a loan, just see if there's a personal guarantee in there. You can ask the question. If there is, I typically would recommend avoiding it. I have taken out loans like that for other purposes, but in those instances, I did so with the advice of bookkeeper, accountant, tax person, lawyer, etc. And so make sure that if there is a personal guarantee that you are taking out, that you have the right people that you're surrounding yourself with, such as the CPA that I recommended earlier at eCommerceAccountingLLC.com. Those are the people that can help you make the best decisions possible. Now, what's great about the things that I teach on this channel and in my course and book is that there is a way to start with $100 or less, $500 or less, $1,000 or less on Amazon. That is a predictable, scalable model that might take you a little bit longer to get going if you aren't using credit cards or loans, but it is a safer model that you can test a bunch of products, see what works, see what sells, and then you can start to scale it from there as is needed. So if you're interested in anything that I offer, be sure to check out all the links below in this description. If you're looking for a course to check out, you can go to bit.ly/PAC course. That's PACCOURSE, and that will get you to the course that I have contributed to multiple times and has helped so many other people succeed with an Amazon business. So these are the things that I would consider before taking out a loan or borrowing money for my business. So do you have any more questions about selling on Amazon? Make sure to leave a comment below, and also don't forget to subscribe to the channel. I hope this video helps you and blesses you, and I hope that you have a great rest of your day and a blessed rest of your week.